Thank you so much for hanging out with me today. I am JB Bryan, the President and Chief Investment Officer at JB Bryan Financial Group, a registered investment advisory firm. And today is so much bigger than just life insurance. Today, I want us to talk about, I want you to think, write down, really get into your place in your mind about what are the thoughts you have about life insurance. This month is September, and September is Life Insurance Awareness Month. So even though we talk about a lot of things, a big part or principle 3 of AfroEconomics is about knowledge, increasing your knowledge. Don't forget, while I'm thinking, throw in that commercial, get your book, AfroEconomics, Our Black Wealth Matters. And the workbook is also available. Thank you, Linda. I have a lovely assistant today. And the workbook, AfroEconomics, Our Black Wealth Matters, the workbooks. And you'll see the Legacy Edition has the West African symbols included in the Legacy Edition. So the traditional and Legacy editions are available for you. And don't forget AfroEconomics for Kids. AfroEconomics for Kids. I'm so excited about that. And the my first printing of it should be in the office like yesterday. So they told me it's been sent out. Go ahead and order yours online. The AfroEconomics for Kids, me, my family, my legacy, which involves life insurance, your legacy plan. This weekend, building your legacy. We're going to talk even more about life insurance, investments, Wall Street, entrepreneurship, all about building your legacy. Because in life insurance is a part of it, but it's not the only thing that you can do. But today, let's just assume it's the only thing or one of the major things that you can do. But whenever I think about life insurance, I think about Carter G. Woodson. I don't know if you've heard or you've read The Miseducation of the Negro by Carter G. Woodson, but I love it. And in the book, he uses as an example the North Carolina Mutual. North Carolina Mutual, I think, was the first Black-owned insurance company. And he talks about why when we went to college, we didn't even consider doing jobs like that were all 100% commission based. So North Carolina Mutual back in the 1930s was going around to historically Black colleges recruiting graduates at that time. Now we're talking about the 1930s, that we were already afraid of getting in a position of creating our own income, creating our own wealth, getting an understanding of financial services. That was our first en route into financial services, was through insurance companies, through using insurance policies. Now, every summer, I was taken back to where I was born to spend the summers with my grandmother in North Carolina. Now, North Carolina Mutual, of course, was based out of North Carolina also. Oh, my fro is looking kind of interesting. Let me just pat it because I'll be mad when I watch it the whole time. So but the North Carolina Mutual, of course, the home place of the first Black-owned insurance company. Now, somebody in New York is probably going to say, like, that's not true. That's not the first. Well, let's just say one of the first. So they were recruiting. Remember my story. We're recruiting out of historically Black colleges, and back in that day. And at the colleges, the graduates were like, no, I'd rather have a job as a teacher. I'd rather have a job as anything. I just want a job. They did not want to develop a career in financial services. And because it was commission based, totally based on your production, what you do for yourself. And he writes in the book, The Miseducation of the Negro, of what a disadvantage we are at when we're not educated about how we actually can take care of ourselves, how we have to make sure that we encourage our young people to understand the advantages and the opportunities in an entrepreneurial mindset. Another principle of AfroEconomics, entrepreneurship. Make sure you get the book. You'll love it. Hopefully, in many, like hundreds of years later, like I'm talking about The Miseducation of the Negro by Carter G. Woodson, we'll be talking about the AfroEconomics 10 principles. But he writes in the book, when you control a man's thinking, you do not have to worry about his actions. So look at how important it is that we are in control of our own thinking, that we develop our own understanding of what security looks like, of what financial products are, of what financial products are best for us. So yes, September is life insurance awareness month, but every day, every month here on this camp is financial awareness month. We have to learn to control our own thinking. We have to learn to investigate, question, and find out more, and find out everything that you can find out about all of the financial products that are available to you. So I bring you back to North Carolina. So I remember every week like clockwork, an insurance agent will come up to the house collecting money from grandma. It was like, I don't know. I don't know. It seemed like a lot of money to her because it took a long time. We'd be all sitting out on the porch and she'd have to go inside and collect the money, which was amazing to me. He came all the time. Like, why does she not like expect him? I don't know. But she's always like, oh Lord, let me get that money together, this and that. And then so many years later, when my grandmother passed away, I was amazed at how small that policy was. Now, I know how many weeks she paid for that insurance. Like, I'm like, it should have been some serious, some serious money there. And there's actually, been investigations where our community actually has been victim of some companies actually exploiting us. That we were actually paying more into the insurance policy than the death benefit ever paid out to us because we weren't ever thinking about how much money we were putting in it. We don't have enough of us getting involved in financial services, learning and understanding about it, or just you don't have to do it for a living in order to make a commitment to, learning more about the opportunities that are available to you. So that we want to make sure. So my lesson there is that we need to make sure that we are very careful in our life insurance purchases, that we're very careful about which type of policy we get, when we buy the policy, how much we're paying in. Look at the illustrations. I've had several clients, unfortunately, go through situations where they were promised things and that they were not given the things that they were promised, and the things that they were promised really were not in writing. So the things that they were promised were in writing, but it weren't part of what the insurance company actually said that they were going to do. It was just in writing on a separate document. Don't find yourself in that situation. Use this opportunity as an opportunity for you to go into your file cabinet, pull out your life insurance as well as every insurance policy. Don't even let me start telling you the horror stories about disability insurance policies and long-term care insurance policies not ever paying out, and the person having to go through so much paperwork and documentation that they died before they even got the benefit of using some of those policies. Make sure you find out the definition of what your long-term care policy will pay out based on what conditions, what your disability policy will pay out for how long and what it is, and your life insurance, most importantly for this discussion. What is covered? How much death benefit do you have? If you take out a loan from your life insurance policy, if your policy that you have even has loan privileges, if you have loan privileges, what does that mean? What are you doing? What is it? What type of policy do you have? Oh, it's scary how many times people say, I don't even know. I just know that I have some. That's not enough. It's not enough for me. Don't let it be enough for you. When you control a man's thinking, you do not have to worry about his actions. If you are controlled in your limited thinking, if you have been convinced that not knowing is okay, then you will always be held back. It's not okay to not know. It's not okay. It's not okay to say my husband handles that. It's not okay to say my wife has that somewhere. It's not okay to not care about how your loved ones will be provided for if you die today. It's not okay. That is totally inappropriate to think I'm not going to leave something so that someone else is going to get it. I promise you, when you're dead, you're not going to be in a position to worry about who came after you, or if your wife married somebody else and he has access to that money. I'm praying that you are in a better place, and life insurance is for those who are still here to carry on. If you have joint debts together, how many people go out there and get car loans together but have no way of paying off that car loan that you have with that person? Say that's your boyfriend. You're not the beneficiary on her policy, your girlfriend's policy, and you have these debts together. That's a problem. People have been killed in bad accidents, leaving their boyfriend or girlfriend with these debts that you did jointly, and no assets, no cash to pay off that debt. Now you have to pay it completely by yourself. Now, be thoughtful. Think through these things before you put your name on things, and investigate, how will I pay this off if something happens to that person? How will I make sure that this is paid if something happens to me? Because they'll be left with this. Joint is joint. So your house payment, it's joint. It's still going to have to be paid if one of you passes away. So in a financial needs analysis, that is the best way to determine how much life insurance you need. Now, many professionals in the industry will say that just do 10 times your salary and that's enough. You know, hey, rule of thumb's a rule of thumb, blah, blah, blah. But determine it, you can go into jbbryan.com, AfroEconomics.com, click through to the corporate site, and you can do a financial life insurance needs analysis. You can call me directly, email me directly, do a actual needs analysis. Email me at jb@afroeconomics.com. Leave a comment with your email. Do whatever is important to you, but don't assume anything about what you need. You might, you know, that means this is rare, but you might be one of the few people that have way more than enough, or you may have way not enough, you know, but it needs to be analyzed, and you have to find out what is the appropriate thing, not just based on, this is the policy that that person sells, and this is how much money I have, and that's what I got. No, it's about you. It's not about what that particular company is selling. It's about you and you getting the appropriate coverage that you need according to the budget that you have available. So let's think about, you know, situations. The bottom line that I want to make sure that you have with you, that you keep with you, that you always keep in mind. Life insurance is for it's filling the gap. It's for filling the gap between the money that you have and the money that you need in order to take care of your financial responsibilities and people that are depending on you today. So of course they change over time. And so there's different types. Let's talk about the different types. So we talked about the financial needs analysis. That's the best way to figure out how much you actually need. It takes a little bit more effort than just saying blank number times my income and that's it. No, you really need to know how much you need based on the financial assets that you have available, and you subtract that away from what you need. You might have some policies, you may not have enough. You might find out that you need $1 million. You have 200,000 in assets, and you have another 500,000 in, you know, life insurance already. So, you know, then you add those together, subtract that from what you need to have, and then so you don't have to start all over. You know, you can layer your policies, you can layer your coverages. So then what types of insurance? There are basically two types of insurance: permanent, and then permanent has all these different categories under it. And then there's term insurance, and term has all these different terms: 1 year, 5 year, 10 year, 20 year, 30 year. A term is only covering you for that period of time. And the permanent based on your payment. You can set it up where it covers you, protects you for life, and you have a fixed number of years of payments, or you can spread the payments out over your entire life. And so there's a lot of different strategies. The permanent insurance accumulates extra cash, so you're paying extra. So the term, you're not paying any extra into it. That's why the term coverage will be cheaper, but it does expire. So you have to, realize that it will expire, what type of responsibilities will still exist, and you can only estimate at the end of that time. So you can have a lot of illustrations that might say, well, the the term is the best thing, and you buy the term and you invest the difference. Well, you need to have a good understanding of what that's saying, that is that appropriate? Because if you have term coverage and it expires and you still need more life insurance, you better realize that that premium 10 or 20 years later might be 10 times higher than it would have been if you got the permanent policy at the beginning. So be very careful. Make sure you get a professional involved that you really trust, and that you really develop a long-term view, a long-term way of looking at your financial situation. I believe that your best multi-million-dollar mindset is to think in decades, not just think in weeks and years and days, but to think decades, even and beyond, and thinking in generations. That's where you build real wealth over generations, and that's why AfroEconomics is very important, because we need to make sure that we have we're thinking every day. Every financial decision that we make is about, how is this going to impact my family for generations to come?
JB,
yes,
it's also called whole life insurance.
Yeah, Linda was asking me, was permanent insurance the same thing as a whole life? Is whole life? Very good question. Whole life is a form of permanent insurance, and so whole life is also has another form of permanent insurance called universal. So, you have the universal, and you have the whole life, and you have variable universal. You have so many different types of permanent insurance. So definitely, that's a very good point. But realizing there's only two major types: permanent, and the types, all different types of permanent, and then the term. And you can choose for what term and how many years of coverage that you will have. And I thought it was an interesting point. Yesterday, I was on Virginia This Morning show, and we were talking about insurance, life insurance awareness month in September. And the question was, if you're single, don't have any dependents, do you really need to have insurance? And I said, like, the easy answer to that is, no, you don't. But the real answer to that is, you have to do a financial needs analysis, because there are many people who are single but have debts. Like, say your parents helped you pay for your school, pay for your education, and you have $100,000 in school loans, and your parents are on that, and you don't have any insurance to help your parents pay that off if something happens to you. Well, so or you have a car loan and you got it together. You're single, but you have this friend that you did this debt with, or your father, your mother, you did the debt with. You want to make sure that they're taken care of. So unless you have, investments and savings that will cover, and that they're the beneficiary of, most importantly, it's really sad when the beneficiary of the assets is someone different than the person who has the debt, the co-owner on the debt. So we have to be, and you see that in a lot of boyfriend-girlfriend situations, fiance, those long-term fiance situations where they've done this debt together, but they haven't taken that extra step of making sure that they're the beneficiary on the policy, or even, that. So, hey, life insurance awareness. Update the beneficiaries. Saddest stories about the ex-wife still being the beneficiary on the life insurance policy, and you're married to your new wife. that's a sad story. And you and the new wife get the house together, and the old wife who had the house paid off at divorce, is getting the life insurance, and the new wife is in debt now, and you're gone. So now that she loses the home because it was based on both incomes. Woo! Yeah, these are real situations, and we have to keep it real and really update the beneficiary forms on your life insurance policies. Make sure, do you have enough? Do you have enough coverage? And if you are, and it's also an argument of why it's so important to be healthy. The 10th principle of AfroEconomics, Black health and Black wealth. It costs you so much to buy insurance if you are not a healthy person or have a healthy lifestyle. You can even have some hobbies like skydiving and you like to pilot airplanes or things like some hobbies will make you uninsurable. Thank God that motorcycle riding is good, but motorcycle racing is a no-no. But definitely so next time somebody tells me that it's too risky to ride a motorcycle, I will tell them, but it's insurable, so leave me alone. But no, I guess because there's probably not there's not statistically ways where they can say that if you ride a motorcycle, you're exposing yourself to an extreme amount of more risk, God forbid. So, but if you are racing and allowing yourself to be at those extreme speeds, then you are at a much higher risk of death. And they don't want to insure that. They don't want to insure people who are allowing themselves to be in life-threatening situations repeatedly. And so we have to be careful with our lifestyle, with our hobbies. Smoking makes it much more expensive to insure you. If you meet someone, you fall in love, and they're a smoker, you might as well know that it's going to be a lot more expensive for you to insure them. So that's going to take much more money out of their pocket. And if he's a smoker, I always say, as a single woman, I go, well, he's basically 10 years older than he is, because smoking, takes away years of your life. And we've got to keep that real. So insurance companies have actuaries, and they say, well, you're a smoker and it's reducing your life expectancy. That means we were going to have to pay out. If you're 35 and you're smoking and we find tobacco in your system, that means that you're going to die, maybe 5 to 10 years earlier, or, then a person, this is all based on just their numbers, their research. They've got the data that you are hurting yourself when you do these bad habits. They even ask you, like, how often do you drink? Have you filed bankruptcy? These things are, allowing yourself to be in highly stressful situations. Have you committed a felony? They're asking these things because they have to protect themselves. But if you want to have a healthy lifestyle, you should call me and ask for me to send you a basic life insurance policy and all the questions that they ask. And, I thank God when I look at them and I go, it's a blessing to be able to say, no, you don't have that. 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 No, I don't take that med. No, I don't take that med. We have to be very, in honor of Life Insurance Awareness Month, we should call it like Health Awareness Month. And that if you are like many people who want and need life insurance in order to protect your loved ones, and you want it to be affordable, make your life a healthy lifestyle so you can bring down the premiums dramatically. Be as healthy as you can. I know that we're under a certain amount of underlying stress. I realize that. I know that if I had been born into extreme wealth, or some extremely, extremely wealthy, very nice, personable, good man had fallen in love with me many years ago, that everything would be different, but it's not. Hey, I am an entrepreneur. I'm under constant stress. So it makes it more important for me to make sure that I have healthy habits. Many entrepreneurs use our stress that we're under as an excuse for us to develop bad habits, but it costs you so much more. It costs you to not be able to protect your family, from an untimely death. Or if you do have to provide it, then it pulls away from your ability to save or invest in other things because you have to pay more for your life insurance coverage. But so let's be conscious of that while we recognize life insurance awareness, that our habits, that we have to be responsible for ourselves. Carter G. Woodson quote again, when you control a man's thinking, you do not have to worry about his actions. So if we think healthy, then we're going to make healthy choices. When I do something stupid and eat something stupid, I know that I'm thinking stupid. Or what are you thinking when we do things that are pulling away from ourselves? What are we thinking when we say, oh, it's not important to get insurance for my family? What are we thinking? What needs to be corrected? What needs to be? So when you control a man's thinking, let's talk about myself. When I control my own thinking, I don't have to worry about my actions because I know what I want. I know what I need. I know what I desire for myself and my family. AfroEconomics is a financial management program designed for the advancement in Black wealth in America and abroad. We deserve to be financially free. We deserve to be financially independent. Life insurance can be a key way to build wealth for your family in the future. It can be a key way for you to build wealth using it properly and with the proper tools, but it needs to be investigated specifically for yourself. And you need to reach out to the financial professionals that you feel comfortable with and investigate all of the options and how you can maximize and use it appropriately. But knowing that life insurance is life insurance. Be careful when you try to use it for everything. Buying a life insurance policy, that's your retirement plan, your college plan, your death plan, and all of these things in one. Focus on your specific needs and stay focused. And be very careful. There is nothing on the planet that can take care of everything. So be very careful when you're promised everything. Anything that sounds too good to be true typically is. Be careful, investigate, stay focused, always be in tune with reality. And if it doesn't sound right, don't do it. When in doubt, don't do it. Look for the answers. You deserve it. I am JB Bryan, the President and Chief Investment Officer at JB Bryan Financial Group, a registered investment advisory firm, and I've been serving investors for over 20 years. Don't want to tell you how many, but enough. But I thank God for you participating. Thank you for watching. If you got to this point in this video, a gift for you is if you would email me, I will be happy to send you the email edition of AfroEconomics, Our Black Wealth Matters, the legacy edition of the book. You will love it. I will send you the ebook to your email, but email me at jb@afroeconomics.com. Thank you to those of you who hung out last week and you did get the book, and I really appreciate your enthusiasm and your thank you. You would be amazed at how many people don't say thank you. So thank you, and please say thank you to me by subscribing to the channel and clicking like. I appreciate the support. It helps my life be healthier and reduces my stress. Love is a beautiful thing. Have a great day. God bless you. Hang out with you next week. And don't forget, leave comments and I'll be happy. I promise you, I will reply. Have a great day.